What's up, YouTube fam? Welcome to the Iconic Show. It's your host, Inam Khan. In this video, I'm gonna go over how I made over $5,000 last week in the stock market by investing using Robinhood. I'm also gonna go over some tips that I think will be extremely beneficial for beginner investors, so make sure you stick around for that. It's gonna be very helpful for you and hopefully help you become profitable. I'm also gonna go over my portfolio and the stocks I bought and sold in the last week and why I did so you guys can get a bit of background on my mindset and why I did the things I did. So make sure you watch the whole video because I think you will definitely get some tips out of this video that will help you become profitable if you aren't already. Before we actually get started, I want to show you guys a screenshot of my portfolio and me actually making the $5,000 so you believe me. Unfortunately, one of my biggest pet peeves are YouTube and TikTok stock market gurus who talk stocks all day but yet never show their portfolio. The truth of the matter is a lot of these guys don't make money in the stock market. They are not profitable. They actually make a lot more money off the courses they sell. I don't want to be one of those guys. I want you guys to believe me, and I really hope you guys never follow anyone without actually seeing their portfolio. So before I go over my portfolio and exactly which stocks I bought and sold and why, I want to give you guys 5 tips for beginner investors that I think will really help you guys out, and I think it will really help you become profitable. So number 1 is your mindset. Get your mindset right. If you treat stock market investing and trading as a get-rich-quick scheme, you will most likely fail. Treat it like any skill or trade. Try to learn as much as you can. Treat it as a long-term goal, and I promise you, you will succeed. Constantly focus on trying to learn as much as you can about stocks and how you can improve yourself. And keep in mind that percentage increase is far more important than profit, okay? If you can get a consistent 10% growth, trust me, that will add up once your account size increases. You want your trading chart to be a strong, steady growth pattern. You don't want a sporadic chart. A sporadic chart basically just means you're gambling and you're getting lucky. That's all it means. You want slow, steady growth and just be consistent and stick around. Keep in mind that 90% of traders lose 90% of their account in 90 days or less. Don't be one of those people. Just stick around, be smart, and keep investing, and don't give up. Which brings me to tip number 2, which I've already said a million times. Don't give up. Guys, people are making money in the stock market a million different ways. People are doing it in tech, in biomedical stocks, they're playing earnings, swing trading, they're day trading. There are a million different ways to make money in the stock market. All you need to do is be patient and show up every single day. You're gonna start noticing patterns. You're gonna find your own way of making money that works for you specifically. I can't teach you exactly how to make money. You're gonna have to learn it on your own. It's called your edge. And once you develop this edge, I promise you, you will do good. Most profitable stock traders, it takes them around 6 months to 1 year to really learn that edge. So just stick around with it. Tip number 3 is stick to the same big stock names. This particular tip has helped me out immensely. Guys, instead of playing a different stock name every single day, find a few and stick to them like glue. Learn their price inside out, their movement, their behavior, their balance sheets. Learn a few extremely well, and I promise you, you will do well in these. You'll start to find patterns and see, what prices these stocks should be at and when it's underpriced, when it's overpriced. You'll start to pick these things up with time. I personally follow big tech. I follow stocks like Apple, Facebook, Tesla, NIO, a lot of these EV car makers as well. I follow about 10 or 15 stocks and I just stick to them like glue. And I always keep my eyes out for these stocks. If there's a big news that came out or if a stock is undervalued for some reason, it's much easier to pay attention and understand them. If you try to play a different stock every day, I promise you there's gonna be another group of people who focus on that particular stock and they will beat you at it. So just learn a few and stick to them like glue. Guys, make sure you continue to watch to the part where I go over my portfolio and the stocks that I own and why I bought them and why I sold them and my mindset. I honestly think this will help you out immensely. Tip number 4 is buy the dip. This tip has actually helped me out a lot this year. So one of the biggest issues with new traders is that when you see a stock or when you see the market going up, you hit FOMO, which is fear of missing out, and you start buying when that's actually one of the worst times to buy. And when you have stocks and the market goes down and your stock goes down with it, that you want to sell, and that's literally the worst time to sell. So change your mentality up. You literally got to force yourself to be the opposite. So when the market is red, this is when you want to go grocery shopping, right? Which stocks to buy. This this is your moment. And when the market goes green, yeah, your portfolio looks good, but this is not the time to buy. I think this alone has helped me increase my profitability by a lot. So make sure you incorporate this into your trading. And relating to buying the dip, make sure you never sell your stocks at a loss. And this is actually not that hard if you're dealing with big stock names. A lot of these stock names, they'll dip and then they come right back up. Especially if you're dealing with the big tech stock names, you should rarely be selling your stocks at a loss. And when the market dips, learn to dollar cost average. As time goes by, you will have confidence and faith in yourself. So you will trust yourself and your intuition when you make a trade. So just learn to dollar cost average. And finally, tip number 5 is risk management. Guys, learn to manage your risk. Take calculated risks. Before you get into a trade, you should know what the maximum profit will be that you're willing to take and what the maximum loss is that you're willing to take. If you're going into every trade and you have no idea, you're going to end up burning your account. If you go into one trade with all of the money in your account, you're going to end up burning your account. Along with that, you're also going to be a lot more emotional, and you don't want to be emotional when it comes to stock trading. You want to start off stock trading by taking good calculated trades. Know exactly what you're doing and why you're doing it, and what your maximum profit will be, what your maximum loss will be, and build your loss tolerance over time. What this means is that some people, they start panicking when they're down $100, right? You want to build this tolerance over time so you don't make dumb moves. A lot of times they'll sell off when they're down $100 and they could have made a lot of profit. And you're going to see that as time goes by, even if your account is down by $1,000, as long as you believe that the ultimate play will be positive, it'll be easier for you to hold on to it. Holding is one of the hardest skills to acquire because your emotions start to kick in. And that's another thing. Make sure you only play with money that you can afford to lose, money where your emotions will not kick in. Like, this should not be the money you need for rent or like your bill you need to pay. This should be money that you do not care about at all. Your emotions are totally out of it. Okay, so without further ado, let's go into my stock portfolio and I'll show you what stocks I own. So I'm gonna start recording now. So over here you see my balance, and quick thing I just wanted to point out is that this is my list of stocks that I follow. Now this list of stocks are the same stocks that I follow all the time, and I look for any dips or if I see any patterns or if I see any news. I try to follow the same stocks all the time and I stick with the same few. So now let's go over my holdings. So as you can tell, the majority of my stocks are in EV, electric vehicles, because electric vehicles have been booming for, I'd say, the last 6 months, if not the whole year. So of course I have NIO. For those that don't know, NIO is like the Chinese version of Tesla. I have Tesla, I have Plug, which is another EV related stock. This one's American. I have Shift. So Shift is an automotive stock. And I bought this mainly because Meet Kevin did a great analysis on this, and he says that it's very underpriced. I don't know too much about Shift. This is more of a risk stock for me. I bought it just because I read a lot about this and I feel like it could be a decent buy for long term. And then I bought XPeng and XL. So XPeng is another Chinese EV manufacturer, and XL is actually an interesting story. So XL had to do with a SPAC. For those that don't know, SPAC is a special purpose acquisition company. And I don't want to complicate you with the details. Basically, it's another way for a company to go IPO. So XL had a reverse merger with Pivotal Investment Corporation, which is PIC. And I knew this stock was going to jump, and so that's why I bought so many of these. And basically what I've been doing is every time one of these stocks dip, I just go on and buy more. Every time it dips, I go on and buy more. Tesla is a special story because I had about 30 or 40 shares of Tesla, but because it recently got included in the S&P 500, I decided to sell off a large portion. Now you might ask me, hey, getting added to the S&P 500 is such great news. Why would you sell off? Well, I did some research and I found out that up until a stock gets added to the S&P 500, it has a crazy run up. But once it gets added, there's a decent dip. And that's actually what I was waiting for. So I sold it right after it ran up and it was included in the S&P 500. And today we saw a great dip, which is honestly great. I bought a lot more shares of Tesla today. But everything else, I basically just hold on to. I buy and I hold and I sell if I really feel like it's overpriced. If I really feel like a stock has had a crazy run, I might take some profit. But majority of the time, I'm just holding on to these stocks, and every time I see a dip, I just buy, okay? If you guys have any questions about my portfolio or just any questions about stocks in general, make sure you leave a comment. I read all of the comments and I try my best to answer them. Also, one of the biggest tips that I can also give you in terms of stock market investing is you need to get started. The only reason I was able to have a crazy run up like this is because I took the risk and I got started. So I definitely recommend you guys get started. You can use my referral link to Webull below. If you sign up, you will get 4 free stocks if you use my referral link. So make sure you just get started, guys. That's the biggest step you can take as a beginner investor, and just be smart. If you found value in this video, guys, please like and subscribe. I just hit 800 subscribers today. It's very exciting. With that being said, guys, aim high, don't be shy, and thanks for watching The Iconic Show.